over 4% today. Bills on Thursday surge higher on better outlook for the US economy. An Asian Development Bank revises India's GDP growth projections for the current financial year higher to 6.7% from 6.3% earlier. And railway stocks soar on government's plans to spend 1 lakh crore rupees in the upcoming years and to bolster transport capacity. And November trade deficit narrows to $20.6 billion against $20 billion last year. Meanwhile, exports fall to $33.8 billion for the same period. Now, those were your top headlines. Let's also very quickly talk about what we're addressing on the show. We're talking about Amber Enterprises. Along with that, focus will be on Kiri Industries, Poonawalla FinCorp, and of course, Kfin Technologies as well. And we start off with Amber Enterprises. Now, this one has been buzzing. We've seen good volumes coming through even as the stock advances by nearly 8% in trade. And I have my colleague Mahima who's joining us to give us an update on what's really buzzing and why we have seen these gains. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly said, the stock is buzzing both in terms of volume and percentage. The stock is up over 8% in trade today, and the volumes are being traded at 6.4 times its 30-day average. The stock has risen over 57% in the past 6 months, and its YTD return stands at 79%. If you talk about the company, Amber Enterprises is into manufacturing of AC components, mobility applications, motors, and electronics. If you talk about a little about their H1 FY24 performance, the revenue was up 24%, EBITDA was up 25%. However, they've incurred losses, and their losses have doubled year on year. If you talk about the performance highlights of this company, their capability of building has increased 3 times as compared to FY21. The stock is basically buzzing in terms of volume and in terms of percentage both, because there was a UBS report that came out on Amber Enterprises where UB has given target price, and they've set a target price of 4,075, and they've given both positive outlook as well as risk. The positive outlook stated that they expect good orders in consumer durable segment. They also expect good orders in household and from international avenues as well. They also expect good demand in terms of both consumer durables and exports. And the risk that was stated in the reports were that they might face labor shortages, they might also face intense competition in terms of consumer durables, and the rise in commodity prices might erode their margin price, their company's margins. So overall, this was the summary of UBS report, because of which the stock is buzzing in volumes today.
Right, Mahima, thank you so much for getting us those updates. And of course, Amber Enterprises will remain on focus, considering there has been a considerable amount of traction in that particular sector. But from there on, we shift focus to Kfin Technologies, where we've seen another large trade. In fact, a huge chunk in terms of percentage equity changing hands here. Let's get in Mihika for all the details here. Mihika, what do you have for us?
Yes, so Kfin is buzzing because 34.3 million shares changed hand at a price of 500 rupees per share, with making the deal worth 1,701 crores. And now this is equivalent to 20% of the total equity of the company, while the buyers and sellers are still unknown. The volumes are over 100 times its 30-day average. The total volume stood at around 52.38 lakhs, and the highest volumes were obviously at 500 rupees per share. Now, in terms of stock performance, the stock did hit an intraday low of 9.2%. While the stock is down around 4% in the past month, it is up 38% in the past year.
Right, Mihika, can you also give us an idea about what the street view is on the stock, and also perhaps a little bit of color as far as its fundamentals go?
Yes. So when you look at the analyst recommendations, according to Bloomberg, it has 5 buy calls, 1 hold call, and 2 sell calls, and the return potential is negative 1.1%, as the company's stock price has crossed the 12-month price target, according to Bloomberg. You know, recently we had an Ambit report on Kfin Technologies itself, where it maintains a buy rating on the stock at a price target of 665 rupees. Now, the broker says that the company is placed to benefit from the tailwinds in both the capital market and the mutual fund sector. And Kfin's experience in Southeast Asia could also allow the company to expand into larger international markets like Europe, the US, where the RTI or the IT expense for AMCs are significantly higher than those in India. The company also has a larger issuer RTA market share at 42%, and Ambit does expect the RTA market to consolidate in favor of the large players. Now, one of the peers of Kfin Technologies is CAMS, and currently Kfin trades 8% discount to CAMS, but Ambit sees that Kfin could trade to premium to CAMS because their mutual fund business for Kfin will grow at a faster rate. Kfin is also more diversified as a business, and Kfin has also transitioned fully into the cloud, while CAMS is still behind in the transition in the mutual fund business. And lastly, Kfin also has an in-house fund accounting platform, whereas CAMS uses a third-party software, thereby Kfin having better expenses on that segment.
Well, certainly a lot more diversified compared to its peers. Mihika, thank you so much for getting us those updates on Kfin Technologies. And from there on, we move on to the sidelines or Rise Summit 2024. My colleague Sessa Sen caught up with the management of caught up with the management of Liberty Shoes, and this is what they had to say. Listen in.
I would like to know from you, we have seen a massive slowdown when it comes to the mass segment, right? It's an industry-wide trend going on at the moment. How are you seeing the current demand scenario? And I would also like to know what is your outlook on the ongoing fiscal?
Definitely I would start with a positive manifestation. I would like to say that the Indian economy is growing and the consumer sentiments are positive, Indian sentiments are positive. So I would not literally start with a negative note. And I think with you and us together, we will spread positivity that the consumption is high. Having said so, I don't want to deny with the facts you are really talking about, but looking at the positive side, and I think how companies work hard towards gaining the consumer confidence, the consumer delight, innovating the product, and giving them the right value for money product would keep on driving the companies to go forward.
Right, sir. So in terms of premiumization, we have seen that the companies are consciously taking this effort to premiumize, also to stay relevant with the young consumers. At Liberty, what are you exactly doing? What steps are you taking to stay relevant for the young consumers?
So definitely India is a very large market, and premiumization is something which is really helping the brands, and I think consumers are willing to pay better price for enhanced quality. At the same time, there's a 70% of the market is still unorganized, and they are still looking for a value for money product and move from an unorganized sector to an organized sector. So within Liberty, we look at dual strategy whereby we premiumize the consumers who are already with us, and at the same time, we look forward for taking the share from the unorganized market to the branded segment where value for money product is definitely important.
All right, sir. So what is your revenue targets for FY24?
For financial year which we will be closing, we should be closing somewhere around 700 crores, and I think the outlook looks pretty interesting, and we should do a lot larger growth.
Right, so 1,000 crore, is it right to assume that 1,000 crore in another 2 years maybe, or 1 year?
Definitely we are working hard towards it, and I think we should be able to get those figures.
All right, so thank you so much for talking to us at NDTV Profit.
Thank you.
Right, on that note, we slip into a short break, but on the other side, we talk a lot more about stocks. Stay tuned to NDTV Profit. Welcome back to Last Trades. Before we move on to the stocks that we want to address, I want to take a quick look at Maruti Suzuki. Now, what's really happened is, over a course of just 2 minutes, we've seen about 100,000 shares being exchanged, and that has in fact led to a very sharp dip. In fact, at one point in time, it was trading well below the 9,900 rupee mark, 9,830 rupees to be precise. That's thereabouts where we saw that intraday low. As you can see on your screen there, we've seen that sharp dip, and it's recovered to a certain extent. The question really is this a result of an algorithmic trade which has gone wrong? Is this a case of fat finger? That's something that we are going to have to watch out for. But for now, we certainly have seen that the stock recover from intraday lows. At the moment, back well above the mark of 1,000 rupees per share. We'll continue to keep an eye on that one. But from there on, we move on to Kfin Industries. That's the other small cap counter which is in focus at the moment, and it's buzzing on volumes, and it's also advanced substantially. Let's get in Varsha to understand first off the technical details and what's really happened in trade today. Varsha, good afternoon.
Good afternoon, Agam. So if you see, Kfin is actually up 18%, which is led by volumes, and volumes are trading over 7x its 30-day moving average. Now, interestingly, Agam, FIIs are actually interested in this stock with their stake being 46%, and if you see the stake of DIIs is almost 0.5%.
This is very curious, Varsha, because especially considering it is a small cap stock, we don't have any ownership from DIIs. On the other hand, a considerable amount of ownership from FIIs. Can you take us through the credentials of the company, perhaps, which could give us a little more context here?
So let's start with Q2 performance of the company. So if you see, revenue was down 5%. Now we all know what is happening with the chemical industry, and this company is into dyes and pigments. And if you see, there was an EBITDA loss of 8 crores. Now the major reason for the EBITDA loss was sluggish demand and lower capacity utilization, and with conversion cost actually not being absorbed. Now, and most importantly, if you see, they are not able to pass on the cost increase to their customers, which led to decrease in realization prices. And if you see, the company has a net loss of almost 27 crore. Also, one of the reasons is the company's ongoing legal case. So due to this, so the final hearing of the case is between 24th and 26th Jan. And if you see, there are high legal charges which is actually impacting the financials of this company, and that's the reason we saw the net loss for the company. And if you see the future outlook, so the company is expecting recovery in dyes and pigment industry in H2 FY24, and they're really striving hard for optimum product mix so that their EBITDA margin would improve.
Right. Some very interesting details coming out from there as far as Kfin Industries is concerned. Varsha, thank you so much for getting us those updates. And from there on, we move on to a buzzing NBFC, and this one is Poonawalla Fincorp. Now, should we see strength being maintained in this one? There is a likelihood, a small one, but likelihood all the same that it could in fact end up at its life highs and close at that. But it's not at that level yet. But let's get in Himansh to give us more updates on the same. Himansh, good afternoon.
Good afternoon, Agam. So yes, like you said, there is a possibility that the stock could soar to further highs. It's currently trading close to its intraday high, up about 1.4%, and intraday high was close to 1.5%. This comes on the back of 10.3 lakh shares that changed hands in a large trade earlier today, which correlates to 1.1% equity stake in the company, and this trade was executed at 438.6 apiece. However, while buyers and sellers are not known immediately, fundamentally, Poonawalla Fincorp has seen its best year thus far. In Q2, the company's profit jumped 9 times on the back of its sale of subsidiary, and its total income also rose 55% to 744 crores. Excluding the subsidiary sale impact even, the net income was up at 77%, up at 230 crores. They also reported their highest quarterly disbursement of 7,807 crores. And its AUM has also been showing a very robust growth, rising 54% on year last quarter.
Right, Himansh, thank you so much for getting us those updates. And we have more updates coming in from the Rice Summit. This time, it's from Lalit Agarwal, who's the founder and managing director of V-Mart Retail. Sessa talks to him a lot more about acquisitions as well as the plans going forward. This is a slice of that conversation.
Hello and welcome. We are joined by Lalit Agarwal of V-Mart Retail. So my first question to you is how the festive season trends are looking like. We have heard a lot from the industry. We did hear from you as well while you were speaking. So some insights with regards to the festive season.
I think India definitely consumes more in festival. This year, because the festival has shifted, because last Durga Puja, one of the festival season starts from in Eastern India, moved from September to October. So there's some sales which has got moved, so it looks better. It is definitely better, but still much below our expectation. We are expecting a little more because India has not been consuming for the last 2 years. We thought this festival we should get more consumption, but yeah, now it is continuing because of the marriage season as well as the winter season. Marriage season is ending up today, but the winter season is going to continue from today. So we'll have some good times coming in here.
Right, sir. So in terms of the winter, we have seen that there is a delayed winter. Is that a concern or no? What do you think?
So it is definitely a concern because most of the consumption happens when the customer wants, and in the winter when it falls at the right time during marriages and all of those events when the Baratis go to attend the marriages, the consumption gets affected. But definitely, even if it is good winter now, before the holiday season kicks in, we should get a good sales coming back. So there is definitely a concern if the winter is slow.
Right, sir. So my next question to you is on the customer acquisition. You are doing a lot in terms of digital. There are a lot of D2C brands who are now coming offline. In terms of customer acquisition cost, do you think that online is higher in terms of customer acquisition cost? What is it like? I would like to know from you.
See, definitely customer acquisition costs on the digital platforms are largely, I would call, be captured by the mafias of the digital platforms, which are Facebook's, Meta, Google, and then all of these platforms. So their demands are going up. Most of the consumer or companies want to get onto it. So it is definitely more, but yeah, it is slowly and gradually. It also depends upon your own insights, your own ability to drive that understanding on consumer and drive your understanding on the digital channel and map it accordingly so that you can bring them down. But still, the front-end consumer acquisition cost and the digital consumer acquisition cost, the digital consumer acquisition cost is very high and it is not repetitive. It is so difficult, it is not repetitive. So you have to always keep on entailing it. But yeah, how do you build strategy so that you can actually call back those customers and your lifetime value of the consumer becomes higher so that the actual lifetime value of the acquisition cost becomes lower as a percentage.
Right, sir. So on the macro trends, I would like to ask you, what are the factors do you think would actually take to reverse the slowdown in terms of mass consumption? Because this is an industry-wide factor that we have seen several apparel retailers also being impacted because of this. So what are the factors that you think would actually take to reverse this trend?
I think the factors is largely employment. See, in the last 4 years, we've seen a lot of millennials who have come on to the employment market. And this employment market, we need to create jobs, and we need to make them work more, and we need to get them their earnings get more. And how do that happens? And then how does inflation also is a big deterrent for the consumption. So how does inflation also gets controlled? These are some of the activities which happens. And definitely, if India grows, our GDP grows, it definitely is bound to bring in more employment and more money to every consumer. And that is how the demand is going to bounce back.
And time to slip into another short break. Back with a lot more on the other side. Stay tuned in. Welcome back to Large Trades. Well, for now, of course, we're continuing to keep an eye on the markets, which are in fact trending strong. Not too much to speak for otherwise. Good gains coming in, and of course, a lot of this is largely led by information technology companies. Right at the top of that Nifty 50 pack as well, in fact, you have 5 IT companies, and all of them will include something like a TCS in Infosys, HCL Technologies, Wipro, Tech Mahindra, as well as LTIMindtree, all of them up and about, and all of them leading the gains right at the top. In fact, you have no losers as far as the IT index is concerned as well. So certainly turning out to be a great week and great couple of sessions, certainly, especially after we've had those updates from the Federal Reserve suggesting rate cuts next year. Which could, of course, have a positive implication on the US economy, and because of the fact that they have such a high exposure, because of the fact that the Indian IT companies have such a high exposure to US markets, we will see gains. But from there on, we move on to the domestic air passenger traffic, which in fact rose considerably in the month of November, where more travelers took to the skies amid the festival season. My colleague, Vinay, has a lot more on this one. Vinay, good afternoon.
Good afternoon. So air traffic rose 9% to 1.27 crore in November, and this was majorly driven by the festival season, because as we see that towards the festival season, a lot more people travel to their homes or to their respective offices back again. Indigo continued to lead with 61.8% market share in the month. However, the market share fell a little bit compared to October, where it was leading with a 62.6% market share. The Tata Group Airlines was second with the combined market share of 26.5%. There, Air India and Air Asia India, which is now known as AIX Connect, maintained their market share, but it was Vistara that lost 30 basis points. That's why the 26.5% market share that we're seeing, it is down by 30 basis points due to Vistara. SpiceJet, which recently announced a fundraise to strengthen its balance sheet, improved its market share to 6.2% from 5% in October, while Akasa Air remained at 4.2% for the 4th straight month. And after the festivals, after the pilots suddenly exited the company, the growth has remained at the 4.2% mark. But the company had said that it will improve its network and will re-enter the growth phase, but that is not reflecting in the market share till now.
Right. Well, Vinay, thank you so much for getting us those updates. Of course, Akasa will be in focus along with its peers. But on that note, it's a wrap on Last Trades, but lots more lined up on the other side. Stay tuned to NDTV Profit.